It is Wednesday, October 20th, and of course this is the video log that takes 30,000 to 1 million. After I take you through the account and show you the positions and the latest options contracts that are open, I'm going to talk about investing and trading as a skill and as something more than just quantifiable numbers and as a competition. So I'm not really revisiting a topic of the market as a competition, but I'm going to talk about more of how the market's a skill. This is going to be a little bit probably random and slow, and it might take me a while to get my thoughts across because of course I haven't practiced for this video log, and we'll see what turns out from it. But first let me take you through the account, and I'll show you here that I'm sitting at $120,000 on my Robinhood account here. I was up a little bit, around $1,000 today, and I'll quickly show you all the options and all of the equity positions here. You can see the symbol, the ticker, and then the strike price of the option, whether it's a call or a put, the expiration date, number of contracts, whether it's a sell or a buy, and then on the right side, of course, the number here is the daily change in the value of this contract basically. And from all of this you can deduct any information that you might need about my position, and you can pause the video at any moment to try to figure out the exact positions that I have if you're so interested in doing so. If you are interested in doing so, grammar. And here are the equity positions. Mainly Apple was a big mover today, of course, because it's like over 40%, about 40% of my account is just in Apple, which is kind of a big deal. And but now I actually have more into technology, which is HTGC. Hercules Capital is a holding company that invests in, tech companies, so especially like pharma and pharmaceutical technology companies, etc. But they do have like some DoorDash and what was that, Fastly or whatever, some other new like unicorn companies. They have a little bit of equity in that too. So uranium was up a little bit, cameco almost $200. Schlumberger finally up 162. That was trading down all the way down to $15, and now it's 15.5. So that's good news. I do have I think a 16.5 was it? I think it already executed. So now I have 300 shares of Schlumberger, which is cool. I'd love to have more oil and more financials at this point. I'm pretty content with that. In fact, I was looking at adding even more oil and more financials into my account here, because I think they're getting to pretty undervalued territory considering where we're at in the cycle here. Energy transfer was up also a little bit today. It's a lot of oil and natural gas. Not only are emerging markets exposed to all that, but then energy transfer, Royal Dutch Shell, then Schlumberger, so quite a bit. And now a new option that I've opened up, which is youre, I think. Where is it? Right here. youre. This is basically like a container shipping company for Europe. They operate the tankers, that they use to store some of the fuel in the tankers, in the ocean. And they also use them to transport the oil to wherever it needs to be transported to. And this is a pretty interesting play, because back in March when, like oil was crashing down and everything, this is kind of actually going up, even though it's an oil company, because, in the futures market, they needed some place to store the oil, and probably the fees for these tankers were, people were probably renting these tankers out in order just to store oil. So pretty interesting stuff. Right now it's sitting around 827. But what else do you notice about this chart? Okay, I'll challenge you a little bit here to if you remember this chart. Look at December 2016, and then it's more or less leveled off, so which makes it a perfect candidate for selling options against this company. Luckily I can sell options even though it's a foreign company. But this chart looks like what? It looks like cameco. Yeah? Let's take a look at a cameco graph. Let's see a 5-year chart. Look at this, it's pretty similar. Bottom down here in October instead of December 2016. And it's been fairly flat ever since. So I'm not opposed to, I should have been selling calls and puts against this company a long time ago, but it's never too late. Well, sometimes it is too late. And I've also layered up another SPG put or two. SPG is Simon Properties, and I'm trying to get into some real estate. I know it's looking bleak, right? And so is oil, but that's exactly what I think you want to buy. And that kind of pertains to the topic that I want to discuss today. But these are all my positions. It was a nice day today. I might get rid of the emerging market bonds depending on how things play out. So we'll see about that. And that's it. Okay, so today's topic, I'm not going to discuss the stock. I'm just going to talk about the markets a little bit and how I think there's a big skill component in the markets. Let me actually just see if I can improve the audio a little bit here. Turn this off. And hold on one second. Don't go anywhere. All right. Maybe the audio will be a little bit better now. Who knows? But I think there's a big skill component in trading and investing. And the skill doesn't have to be quantifiable. Like, it doesn't have to be just numbers, right? Many people, many investors, managers, they run algorithms, they run programs, they crunch numbers, and they project expected returns and everything else, and they make all these graphs. But what it reminds me of is that of somebody trying to predict exact weather patterns, right? They might get it somewhat right, yeah, like maybe even on a more macro level or on a really micro level. They may get some things right, but no weather report has been 100% accurate. And I mean, that doesn't have to be, but what I'm saying is that especially even dealing with human behavior, it's a little bit even more erratic than that. I think it's even more complex than the weather systems, because one little event can cascade through an entire population and change, the what's the word? Not the ego, but change the state, the mental state, basically, of the entire population, and it could change behavior. I mean, humans are very easily influenced, especially with this kind of network effect that we have nowadays with media and everything else, and these global events just hit the entire population of Earth all at once. And so my point here is that I think that there's a lot to investing and trading than just numbers. I'm not a great analyst. I'm also not a great market timer. I'm not that I've experienced that much success. I mean, experienced so much success. Of course, you see this, definitely doubled the value of this account in a couple of years. So I'm doing fairly well, especially considering the risk-adjusted returns, right? They're not that risky of bets that I'm making, although I did kind of put it on the line in March a little bit, but it's another topic there. I don't mean to say that I'm someone that you should be listening to for advice, but I'm just telling you my opinion, after being in the markets actively for like 15 years, and it's just the kind of feeling that I'm getting is that it is a little bit like a sport. It is a little bit like, some type of competition where you got to get a feel for something, right? Like, it's not enough to just know the parameters of things, like, knowing how big a baseball field is will give me some information, but until I strike, it's not going to help me necessarily become a great batter, right? I mean, I can have the information, but I'm still going to have to make a judgment, right? And I need a bigger picture of things. It's not enough just to know, okay, what is the trend of their earnings, right? Are earnings increasing quarter after quarter after quarter? I mean, what kind of company is it? What kind of business is it in? I mean, right? These types of things definitely factor into a decision when deciding to trade or invest. Like, is it some kind of technology that's sunsetting? Yeah. I mean, what if I was a CD producer? Those discs that you used to play games on and listen to music on. I mean, they barely ever exist, right? What if I'm in that business and I'm you know, I'm cutting costs and I'm cutting costs, and I don't have any competition left because nobody uses them, right? So I'm still profitable. But unless you know that this business is going away and CDs are going to be a thing of the past pretty soon, and my company is going to disappear, right? It might look like I'm in a really good bet, okay? But you know, and if you think there's a chance that CD make a comeback, then that'd be a terrifically good bet. But if my technology is going out of style or out of business, or there's better competition out there that I haven't shifted to the new way of doing things, right? I haven't turned my CD factory into a cloud computing factory, then, you know, I'm going to be going away. And you have to bet on these kinds of decisions, right? You have to be aware of what is the management, what are the leaders of the company planning on doing about the upcoming, you know, technological changes, or, you know, or they're just cost cutting, or they're just, you know, firing employees and being more efficient with their production, and like downsizing their plant, or like what exactly are they doing to try to maneuver in these narrowing waters that they're in, the type of business they're in, you know. Or what if somebody's stagnating and then they're in some kind of emerging technology that's really hot right now, you know. So there's a lot of factors to consider. You could be missing out on a lot of money, or you could, you know, the company might get out competed away. It might go down to zero, right? I mean, so in what seems like a good idea, in retrospect, may not actually be that good idea. Maybe just a fad, right? What about that Blue Apron? I don't know what Blue Apron is doing now, but you guys remember Blue Apron? I mean, it was pretty hot for like 6 months, and they IPO'd, and I don't know. Let me see what's going on right now. Blue Apron. I think it was Blue Apron, right? Maybe they delisted. Or was it not Postmates? I think it was Blue Apron. Bluebird, Blueprint. I don't even think they're on here anymore. But I mean, they probably just went off the market, went bankrupt or something, or someone must have like bought them out or something like that. But basically, they were just, you know, meal delivery kits, and you know, the IPO, they were super hot, and then it was just a downtrend for the next few years, and I guess they're not even on the market anymore. So sometimes just because something is new, and it doesn't mean that it's going to work out in the long run. So I mean, you have to be able to predict that. And how do you predict that? I mean, you got to be a people person, or maybe you need to have experience, right? Maybe you need to have experience with people and with manias and with fads and with trends, and you got to be a trend stud. You know, got to study trends or whatever. You got to figure out what's just hot now and what people actually need and are going to be wanting on a constant basis, right? The shift to shipping, you know, online shopping and things like that has been pretty real and actually pretty accelerated. We might have a correction in that in the upcoming future when people actually want to go out to the stores and buy there, right? So that's another prediction I have to make, right? I mean, I'm just kind of, you know, guessing more or less, or at least predicting with a fair amount of certainty, whatever you think the percentage is, as to what the behavior of the general public is going to be come a specific event. And that's not that predictable. I mean, you have to know humans, right? It's a study of humans. One thing that impressed me with Charlie Munger is that he's very good at, even though he didn't study psychology, but, you know, he has his own little, like, almost booklet, mental booklet. I don't know if he's ever putting those thoughts down on paper, but about you know, different delusions and different ways that humans tend to react in specific situations. And I thought that was pretty impressive, because it was most certainly, and even to his own admission, influential in his decisions when investing. So, you know, that's his edge. One of his edges, I guess, is being more intimately familiar with the psyche. That's the word that I was thinking about earlier. More intimately familiar with the psyche of people in general, right? So there are just so many factors to consider, and the flow. And what if you're a technician, right? Let's say you're the best technician ever, and you say, okay, well, we had a break of trend below a specific key support zone, and then you know, it has a, let's say, 50 60%, let's say 60% chance to materialize, and it has, 40% chance to be a full signal. Okay, fine, thank you. But what if you had more knowledge than that? What if you're also aware of the cyclicality of the specific stock that you're looking at? Yeah, what if it's what if it's a commodity stock, and that commodity cycle is in a downturn at the moment, and so the price of something is crashed and they're broken throughout, so those things are related, and there's oversupply in some areas of the world, and a bit about the fundamentals, then that chance of it following through, all of a sudden, it doesn't stay at 60, right? It's going to go higher because things are not going well for the commodity prices, and maybe you know of other commodities who already had kind of a breakdown, and these things are related. So now you can put the pieces together, yeah. Or maybe you have some kind of insight, yeah. Well, what if, for example, commodity like palladium or something like that, where that there's extreme supply constriction, and it just happened to be going down because other commodities going down with it, but you actually have some kind of knowledge about the supply and demand situation in a specific commodity, then you're more likely to think that it's a false breakdown, right? It's not going to materialize. So the percentages shift. So now you're acting on this knowledge, and you're over below the 50% mark. Yeah. So now you have that, and maybe you have the wisdom to stay out of that specific commodity altogether because of conflicting factors. So I think that there's just, my overall point here is that I think there's a lot more than just analyzing stocks and looking at numbers. I mean, I don't pretend to be a great analyst. In fact, I'm probably one of the worst analysts. That's why I actually like to do just a quick overview of the company's financial statements, just to get an idea of what they're doing. I don't actually want to know the details, because actually if I do dig down too deep and I start learning about the tiny minute details of each company, and what this, they're going to have an extra $100,000 or something like that coming in from such and such unsuccessful lawsuit or whatever, and then I get lost in the details and I start losing the bigger picture of where the company's headed, what its most likely issues are going to be coming up, and what's materially going to affect them or whatever, or maybe something I know about the product. Okay, so maybe it's like some hot technology that's developing the new communication devices that are going to be on people, maybe like the contact lenses with displays or whatever, or like, I don't know, fingertip invisible keyboards or whatever it is. And so I lose sight of that because maybe they got some kind of patent suit or whatever, and they take like $1 billion hit on some technology, but I kind of lose track of the overall picture because now their financial statements look horrible, everything's in the red, and that's not why I got into the company in the first place. And maybe I know the management, maybe I know they're committed, maybe I have other factors that give me the confidence to stay in this play for the long run, right? And I let some little tiny minute details deter me. So of course everybody's going to find their own edge and their own way of succeeding through the market, and I always advise that as well. But I from my perspective, I prefer to just look at things from the bigger pictures and from as many perspectives as possible in order to make some kind of a judgment. Okay, well, that was a really long-winded explanation of my thoughts, even though yeah, I didn't plan any of this, obviously, and I'm happy at least that I didn't stop too many times to think about it, because that's kind of how my brain operates, is I think a lot and don't say much. So this is kind of weird for me to do video logs altogether. But let me know like how you think about buying stocks. Are you heavy on fundamentals or on technicals, or do you like to look at the big picture, or how many do you take every single little piece of information into account? Are you more a study of political influence, or are you just basing your trades off Fed liquidity? Like, what is the biggest factor in your trading or investing? Let me know. I'm curious. All right, with that said, peace out.